Well, we thank you for coming back to the National Real Estate Cafe with Don Gatling and Gino Fronti, where you get your daily dose of real estate market updates and so much more.
I'm probably not going to have as interesting a voice fluctuation as Don does today, but I am going to have something interesting to talk about: Japan.
Japan. All right, let's go to this slide. Now, all this is mumbo jumbo for you, but we're going to express that rates have been increasing. Been warning you about that. There's a couple reasons. One, there's the fear of inflation. Gino's going to talk about the Bank of Japan and what's going on in Japan. And the other reason is, just so you know, the feds have been continuing to purchase mortgage-backed securities and treasuries over the last few years to help stimulate the economy. And now they're pulling back. The economy has been kind of holding its own for quite some time now. Now they're going to stop taking the monies after loans are refinanced. They usually take that money back, or loans are paid off, I should say, and go and buy more. Now they're backing that down by $4 billion each month. So it's a big deal, and that's why rates are increasing slowly.
Yeah, so that's what it is. We call that tapering, right? That means that they're not reinvesting in mortgage-backed securities, hence allowing rates to come back to a natural, non-stimulated, non-artificial market. That's a good thing, ultimately. We do want to, I know it doesn't sound, or it probably sounds counterintuitive, but we want 6% interest rates. That means that the economy is healthy. That means that we don't need additional stimulus. That means that we're not growing our national deficit to stimulate the mortgage market. It's operating on its own, and that's what we need. So that's happening. Bad news for Japan, they still need stimulus, right? And that actually helped our rates when Japan goes, we're not ready to pull back on it yet.
Right.
We still have to continue to stimulate our economy. The truth for Japan is that they had an opportunity globally, 25 years ago, to really become a world superpower, and they've just kind of been slipping for at least the last decade, if not the last 2 decades. And they used to call it the lost decade. And they're going to call it the lost century if they keep going at this rate.
Yeah, no doubt about it. So, and why it's important that we pay attention. Now, remember, we're a global economy. Europe is starting to, make a rebound. They're being more consistent, so that's making everybody worried about inflation. Remember, inflation will push interest rates up. Always does. Inflation is also, in some ways, a good thing. That means your values are going up. That means the economy is doing well.
Probably get paid a little bit more at work.
Yeah, we have not seen wage inflation in quite some time. People are getting jobs, but we have not seen the wage inflation.
Okay, but that's what had to happen first, right? The way wage inflation works is first you need full employment, and then when you have everybody fully employed, now you can start to raise wages because you get wage pressure. So wage pressure is starting to hit a little bit in certain industries. Construction is going through massive wage pressure right now.
Yeah, they don't have enough people.
There's not enough people in construction. Well, there's also none of us that were in construction our whole lives, like me, are teaching our kids to be in construction.
So bottom line is, be careful. Rates are starting to look like they're going to inch up. I think we have bounces back and forth because the whole world is not all rosy, but we are going to see some fluctuations of higher rates than we used to see in the past. So take advantage now. You heard it right here in the National Real Estate Cafe with Don Gatling and Gino Fronti. Get these sent right to your phone by texting NREC to the number 58885, or check us out at donandgino.com.
We'll see you tomorrow.